Time for us to check in with Amanda Lang, host of Taking Stock, which airs, by the way, Friday evenings at 6 p.m. on BNN Bloomberg and right here on the iHeart Radio Network. Going to take a look at our business brief for the week. Amanda, let's start with the numbers that came out on inflation, which at first glance, I guess, look good because they're down from the month before. But there is, I guess, a cautionary tale here with respect to the fact that if it hadn't been for the price of gas going down, we might not be that excited about these numbers.
Yeah, as we all know, anything at this level is still painful. So as you say, it moderated. And importantly, it's moderated now for many months in a row. So we saw the peak of inflation behind us. That's the good news. The bad news is it is still high and it's still uncomfortable and in the double digits. I don't know if you saw the price of tomatoes in this report, but I will be choosing my vegetables, I guess in that case it's a fruit, differently because some things are really, really expensive. So yes, little break on gas. We also saw a break on home appliances, shelter costs. That's great. Still climbing, by the way, but not as much. But food prices are high. And for most of us, that's the big non-discretionary item that really hurts. We can't, I hope we don't eat less. We just have to pay more to eat.
Which again kind of brings us to the point of we're still waiting for Bank of Canada, their next announcement on interest rates. I don't think I've ever seen, if you will, experts in the field as divided as they are now, A, on whether it goes up or down, or B, as to whether it should continue to go up or down.
It's a tough one, and you can imagine for the bank, it's going to be a tough one for them because we've seen the moderation that they want to see, and because we know it takes up to 18 months for a Bank of Canada rate hike to work its way through the economy and into prices, you could say, well, why don't you wait and see how we're done so far? You've just done one of the most rapid rates of increase we've seen in our lifetime, so maybe you pause. On the other hand, the forces that are shaping inflation haven't quite abated. So we're still seeing supply chain bottlenecks. We still have a war in Ukraine. Even though energy has come down, it's still pretty pricey. And don't forget labor costs, very high. So all of that's still in the mix for the bank, trying to figure out what they do. Unemployment numbers haven't softened the way they want to see them. They're not monsters. They don't want to see them. But they need to see that there's a bit of kind of weakness out there responding to higher rates before they know it's really working.
If it does go up, we're looking at, what, a quarter point?
Everybody agrees. Yeah, they're not going to do anything dramatic. If they move at all, it's another quarter point. And I think we can still pretty safely say what we kind of took from them after the last meeting, which is they're almost done. They want to be done. They're close to the top. So if you're looking at your monthly costs and you are feeling the pain, at least you know you're very close to the cost. That's cold comfort, of course. Another quarter percent will still hurt, but at least you know that you're almost at the end of the upward limit. Then the next question will be, how long do we stay here?
Right.
Do we see it coming down anytime soon, or are we going to actually hover at this level for quite some time? And there, boy, are the experts ever all over the map on that one.
Okay, let's talk about Zellers because
let's talk about Zellers, Natasha.
I'm very confused about what's going on here. So Zellers became Target, the brand failed. Why then bring it back, and is this viable?
So it's really interesting that when Hudson's Bay Company sold the actual brick and mortar locations of Zellers to Target, they kept the retail name and brand. It has a long history. You're probably way too young to kind of be very familiar with it.
I'm not.
Thank you. Thank you very much. Thank you,
but no.
Well, it really did loom large back in the day. I grew up in Manitoba, so it was Woolco for me. But these discount retailers, they played a big role in our lives. Fast forward, interestingly, value chains have come around again. They're very much in vogue. You know that from the dollar stores. They're doing incredibly well. And so you get the revival of this brand that says value. HBC is kind of folding it into their existing real estate, doing an online push. I think there's a question mark around how successful it will be. I assume they've kind of run the numbers and they think they'll draw people in. But it's just an interesting revival of this brand, and that it's inside an HBC store in terms of how they're positioning it is also kind of fascinating, right? And maybe a little bit contrary to what we would know about how you brand and market HBC. So it's interesting. I've got a kind of a pin in it to see if this plays out the way they're hoping it will.
I just love that you describe it that way, as odd in the middle of an HBC store. When you look around, of course, you see fashion brands with their own sort of nameplate, boutiques and stores. It's like Zellers would have been the last one I would have expected to see next to Chanel, for example.
It's definitely, maybe you get the diversified shopper, but yeah, maybe it just isn't the right fit. And I think what they're trying to do is just raise awareness and hope that it's a digital play, and that might be the thing that is successful for HBC. Interestingly, the real estate is where it gets interesting for retailers. As a retailer told me years ago, when the value of your real estate is worth more than the value of your retail business, the writing is on the wall for that retailer, and that's been true for Eaton's. It was true for Sears. Is it the direction that HBC is headed? I don't know, but are they sitting on valuable real estate? So you can kind of see an interesting play where their brick and mortar has to shrink as well.
Yeah,
it just seems so risky to me. Like the Bay's been struggling, HBC's been struggling. This seems like a risky move.
Agreed.
Let me move on and talk about what we're seeing now. And there's yet another announcement today. Amazon, Google, Microsoft laying off literally thousands of employees. I think in one case over 5% of their workforce. This because, I'm guessing, Amanda, they're baking a recession, and clearly demand has slowed. But I wonder if this is kind of a life cycle for a major business, right? You overhire when things are going good because you expect the growth will go on forever, and then you kind of wake up and say, oh, look, now we have to let these people go. So how does this play out, when this is all over?
I think you've nailed it, and that's how we should actually frame it. These are businesses that were seeing record levels of demand, and so if you're running a restaurant and suddenly 10 times the number of people want to eat there, you hire a bunch more chefs, you put in more tables. Well, now the people aren't coming anymore, so the chefs have to go. So a lot of these layoffs we're seeing will be on the old accounting principle of last in, first out, and so they were probably the more recent hires, and out they go. And does that look bad on the companies? Well, you've seen some big apologies from these CEOs saying we overhired during the boom. They can't really do anything else. And by the way, there's a really human element to this where there was kind of panic hiring because everybody knew that they couldn't get their hands on engineers, so they went and hired anybody they could. So it's a bit of kind of right sizing. The really important question for most of us is, will this mean a lot of layoffs in other sectors? And we just haven't seen that. We still see vacant positions in a lot of sectors and inability to fill skilled jobs. So this might be very specific to the tech sector. And actually, I should note, I saw a data point, just one, but here it is, that something like 72% of the people laid off so far have been rehired somewhere else. So there could just be some churn happening here, and it's not all doom and gloom for these workers.
Okay.
Interesting. I'm just thinking about what's happening here in Montreal too with Lightspeed. I think they're cutting 300 jobs. So are we expecting a wave of these, do you think?
I think inside the tech sector, we've seen it. Lightspeed, Shopify has not been immune. And again, these are people that are, for the most part, highly employable. They will find other jobs. They're very much in demand. And they may even turn right back into these companies in a quarter or two, depending on what happens. The question, I think, is it that the companies are afraid of recession, or did they overhire? And I'm inclined to think it's more the latter. They just overhired, and now they got to right-size their business for the times we're in.
All right. Before we wrap up, let's talk about Canadian Airlines, specifically Sunwing. The rumor is they may be going bankrupt. Look, it's not a good time for airlines, or maybe it is. People are traveling again, but we know the panic and the chaos over the Christmas holidays, that's going to hurt your bottom line. So is Sunwing done, do you think?
It's a dicey time. I mean, what Sunwing found, of course, its model of very lean operations, of having as few planes as possible, keeps it lean and keeps its prices lower relative to others. When a big storm hits in a big enough geography, as we all just found out, it shuts the whole thing down. And so now it's having a kind of a reckoning of, does it have the staff it needs? Does it have the planes in places that it needs? And yes, there are rumblings that it's going to have to keep closing routes. You've probably seen all of the kind of angry customers that would have literally just stopped flying out of some Western destinations altogether, even though people had booked tickets already in their hands for those flights. That's a pretty bad sign. Now, can they shrink enough to get back to some hub, that'll work for them and rebuild? Hope so, because it's good to have this competitor in the market. But all the airlines face this problem of reduced capacity, and they're struggling against the demand. We all want to travel, and there just aren't enough planes.
Amanda Lang, host of Taking Stock. Amanda, thank you so much. Great talking to you again.
Always a pleasure.